a weekly goal. We are at, basically it's just training now, triple arrows, training plan, how we use it, and the homework was to identify the support and resistance, mark up your charts to show how you drop them.
Okay. Okay, so let me show you that. Then I'll just show you a couple.
Yeah.
And you give me a thumbs up or a thumbs down.
Yep.
And so I showed you a little bit from the phone what I was doing. So
Yeah.
I was all over the place, I think, in a good way, not in a bad way. Like I was doing it on my phone.
Right.
I was doing it on my laptop. I was doing it on my PC. Like I was really trying to get in, and I did it on
Trading Way. Traders.
Yes,
Trading Way.
Traders Way. And then I did it on Traders Way. Wait, no. Traders View. Trade View. First I did it on Trade View.
Yeah, Trading View.
Traders View. Right, so I did it on both. So this is what I did. So I screenshotted our conversation.
Okay.
And I was making sense of it. I was drawing the trend lines, making points. I was saying, okay, impulse. I was saying this was.
Were those my lines?
Yeah, this was yours. No, I made the lines. Nope, they're mine.
Okay.
So they must not be all that great. So I was still working on them. So those are my lines. No, I got your video.
Good.
And then it was make sure they're on the top and make sure that they're touching the wicks.
Right, and also, so your blue line for the impulse right there where you are, that actually should be on the opposite side, on the other side. For bullish, it's from the bottom of the bullish candle up. There you go. And for the bearish, it's from the top down.
Oh, okay.
And that one would just be from the top down.
Good to know.
Yep.
And they never cross the body.
Right. Yep. Those are good.
Right. So much better. Okay. That's great.
Yep.
That's great. So bullish run, we have some consolidation action, and then it broke structure. If I were to trap it, I didn't trap this one.
It looked like you did. Did you trap it? Let me see. To see the consolidation. And where did it break out? Where did that first consolidation break out at? Just point to the candle. The breakout.
This first one. This first one was here.
Right. And so
this consolidation.
It consolidated.
That was the first one.
There you go.
Mm-hmm. And then it consolidated again, and then another breakout.
Right.
So impulse, correction, consolidation, continuation.
Yep.
/ impulse.
Yeah.
Then it's correction, consolidation, breakout again, continuation / impulse.
Mm-hmm.
Then we have the correction.
Mm-hmm.
And then I think this is correction, and then consolidation, and then it broke out right here.
Yes.
It went from here to here. That was the breakout time. And then we have the impulse, and we got a consolidation again. It's like a little correction, consolidation, continuation, consolidation, and it's
and that's all it does all day. That's all it does. And when we're able to identify where price is at every time we go to the chart, you're going to be on the right side of price.
Nice, right side of price. And then I started writing down, lower lows, higher highs. Lower lows, bearish. Higher highs and even higher lows going up. So higher highs, higher lows, up. Lower highs, lower lows, down.
And that's how you identify the trend. That's with the eye, just strictly price action. Though the triple arrows provide that for us, but just knowing how to identify that with your eye, that's where you really want to be. So yeah. And what helps to guide when you know that it's breaking out from a bearish trend to a bullish trend is using your trend line so that you can actually see the break of the higher high and the higher lows, or vice versa.
Okay. And bulls run under, meaning the trend line is below, and bears on top. So is above.
Now explain that to me. I just want to make sure that what you wrote there is really what it is. You said bulls are below.
Yeah.
Like I see it on here though, but based on what you wrote, it's not connecting with me. Bulls run under.
Bullish. How about this? Bullish trend line. Well, how about this? How about we just write it plain what it is? Draw.
What you said? That's
just write plain. Draw the bullish trend line underneath. You're absolutely right.
Yeah. That's okay. Well, here's the thing. You understood it. I didn't. As long as you understand it, that's all that matters.
Line above. There we go.
Yeah.
That's all good. All right, so say what it is. Just keep it plain. So, all right, bearish candle closing below the MAC 50 means selling time.
Yes, selling territory. That's what I would prefer you put, because you don't necessarily sell unless other parameters are met. But under the 50 is selling territory. Mm-hmm.
Territory.
And you'll see what I mean when we go over the trading plan.
And so then I jump over to trading view, and I started like marking it up and stuff. And this is kind of what I came up with. I do the impulse, which now I know needs to be on top, so I need to move that there. I consolidated with horizontals.
Mm-hmm.
And when we are looking for the consolidation, we look to the left. So,
yep, everything. We look to the left for everything. Mm-hmm.
Closing candlesticks. I'm starting to, so I did look at the trading Bible, or the candlestick Bible.
Yes, the candlestick Bible.
To understand when it's green, that means the opening is at the bottom and the closing is at the top. And when it's bearish, that red, it's opening at the top, closing at the bottom.
Absolutely. That's pivotal too. Just understanding the movement, the direction of each candle. And especially when you start getting into engulfing candles and such.
So I don't want to spend,
Yeah, well, no, you did great.
That, but
you definitely got it.
Show you
you have a handle on that, so that's, and I'm gonna tell you, just that alone, what you've been able to identify, you can actually determine where price is going. You can actually get in a trade based on just that information. Of course, we're gonna expound upon it, but that's how crucial it is to understand what price is doing at all times. Okay, so now what we'll do is take a look at the charts, y'all. Put it on the chart. All right, you see my chart?
It's coming up.
Okay.
Yep, it is.
Got it? Okay, awesome stuff. Now, everything that you just identified is already identified in the system, the triple arrow system. So, and that's great, but you know what it is. So it's identified with the support and resistance dots. Now, your resistance dots are above price. The support dots are below price. And it coincides with the direction of the candle, how candles move. So if you're bullish, you know we're traveling up, and when we hit a key area, it's going to be a resistance area because we're traveling up, right? And just the opposite for a bearish, we're traveling down and we'll hit a support. We'll hit a support. So support is synonymous with a bearish candle, and resistance is synonymous with a bullish candle, solely based on the direction of movement. But that does not mean that you're not going to see bullish and bearish candles in between those runs. You will see that. Okay. Alrighty. And so with the trading plan now, this is really an all-inclusive trading system because you have your trend lines already here and it actively adjusts or respond, I should say, to price. You have your support and resistance that are populating as the market is active. It responds to price. I mentioned before that the candles don't move the price. Price moves the candles. And the support resistance dots, they respond so well to price. They really hold true to those areas. So when we are trading this system, the big arrow simply tells us where price wants to go. That's the function of the big arrow. It tells us where price wants to go. That doesn't mean it's going there yet. It's just an indication to us. Now, once certain additional criteria is met, then we know we are in momentum. Now, what's important to know about that too is if you have a bearish big arrow like we have right here, and we don't have the triples yet, we only have one small arrow. In essence, even this little pullback and all of that, this is still ultimately a bullish market. So, can you trade it when you see the big arrow? Yes. Do people do it? Yes. But it is a low quality trade. And when you have a low quality trade, you're going to have a high risk trade. And of course, we focus on quality over quantity. So we wait for additional criteria to be met before we actually get in the position for a sale. Okay. Now, once you have, okay, so now let me talk about this real quick. The 50 moving average is is what I added to the system, right? So it's very important to have this 50 moving average on here because what the 50 moving average does is protects you from getting in the market too early. Because when you get in too early, you just set yourself up for a bad day, right? So the 50 is crucial to all of that. So that's the big arrow. When we have the two small arrows that populate, in theory, the trend has began. The trend has began. So if this is bearish, it wants to go down. We know it wants to go down, and eventually it will. So when the two small arrows populate, in theory, the momentum in that trend has begun. However, as you can see, it still would be above the 50 moving average, which confirms that we're still in a low quality trade, even though price is going down. Still low quality, still high risk. It's not until price crossed the 50 and closed that we have entered into seller's territory. And we're looking for a bearish candle to cross and close. That confirms that we've entered into seller's territory. Okay. Now, a lot of traders that use the system don't do this. This is my trading plan that I added. So for the most part, the basic instruction is that once you get your triples, you can get in trade. But what I found is you still can be in early, because if you're in the wrong territory, and you can clearly see the difference. And oftentimes I hear a lot of traders say, man, when I get the triples, I get in and I go right into drawdown. Well, a couple of things. One, you were probably not in the right territory. And two, you did not analyze where price was. What is price doing? Remember those three questions that we always ask ourselves when we go to the chart. And that is, where am I? Or in parentheses, you put, where is price? Where am I? The second question would be, how did I get here? How did price get to where it is? And then the third question is, where do I go from here? How do I get into this trade? Should I get in? Should I wait? What's happening? If you're on the hour chart and you go to the 4-hour or the daily to do a top-down analysis, you should be asking yourself those three questions all the time. All the time. Now, the basic instruction utilizing this system is you go up 2 time frames, high time frames, and you're looking for directional support, meaning you're looking for the big arrow to be in the same direction on the chart you're trading. That's okay, but that's not the pivotal point that you want to focus on. You want to focus on that active candle. What is that candle doing? Where is that candle? Is it in an impulse? Is it in a correction? Is it consolidating? And your interest is, if I'm on the hour chart and I go to the 4-hour chart, if I'm on the hour chart and I'm selling, and I go to the 4-hour chart for directional support, I really don't care if the big arrow is not selling or not. I don't. What I'm looking for is what that active candle is doing, because that determines what's happening on that lower time frame. It explains what's happening on that lower time frame. And the reason being is because whatever happens on the higher time frame has already taken place on the lower time frame. That's key. And so I want to show that to you here as well. Okay, so I'm on the hour. We're expecting a downtrend, right? So when I look at what's happening now, that first question, where am I? Well, right now, it looks to be in a pullback, a correction. Then you want to ask yourself, well, how did we get here? How did we get to this correction? So when I look to the previous run, it was a impulse or a continuation, because this is the impulse now. The downtrend is the impulse now. So that means the continuation is the same move, right? So we had our continuation here, And then from this continuation, it led to this bullish candle right here, which is potentially the beginning of a correction, meaning it's going in the opposite direction, right? So what I would do is, let me put me a little vertical line here. So we're looking for sales. We know we're looking for sales when the criteria is met, but just for training purposes, we're looking for sales. So
are we recording? I'm sorry.
Yeah, I am.
Okay, good. Okay.
Mm-hmm. So we're looking for sales, right? And so we're going to go to the higher time frame. And you said that I didn't see my timer, but I see my frame. I see my frame. Yeah. Yeah, we're recording. I think my frame is covering it up. Covering up my timer. Hold on 1 second. There we go. Okay, we recorded. Yeah, it was just kind of down and below. Alrighty. So where was I? Okay. So we go to the 4 hour, right? So we're selling essentially here, right? We're selling. We're only looking for sales. So now we'll go to the 4 hour, and we're looking for directional support. But again, not so much on the big arrow. If the big arrow is the same, is bullet bearish there, that's great. That's great too. But what I'm most interested in is what the active candle is doing. Remember, each candle on the 4 hour chart is 4 hours. So that one candle here, a lot of activity, is 4 hours of activity going on in here, right? So I want to know what is it, where is price here? So if we're bearish, right? Oh, this is nice too. This is nice. We got a nice W. Yeah. Anyway, so we're bearish, right? We're bearish. So what that tells me is this is about to go into what? A continuation. I want that because that coincides with the direction that I'm going in on the hour. This could have been bullish, and this could still be where price is. I wouldn't be concerned about the fact that it's a bullish arrow. I'm more concerned about what is it doing right now, right? So this is consolidation though. And here, look at how it all works out. I just love this when it plays out so beautiful. Oh my. Okay, so we have a nice little trend going up. Nice little trend going up, right? And then, so that trend, this bullish move is a pullback or correction, right? And then it continued right here, those two candles. And then this one candle, remember, it could just be one candle. This one candle is a correction.
Okay.
And then this last candle before the market closed, it closed as a continuation candle. Okay. So inside of here, we're going down. Now, here's the other confirmation that price wants to go down. We're right on a resistance dot. Didn't break through, right? So what do? We box in price. So now we're going to take our trend line and we're going to box in price, drawing the trend line at the top of the wick at the top and the lower wick at the bottom. Now, what we're going to do is answer the third question. Where do we go from here? Well, now that we box price in, we wait for a breakout. Now we are expecting it to break out to the downside because one, the triple arrow said we're going down, right? Two, price is right up against a resistance zone, pushing back down. And three, we are at the beginning of a continuation run. So I'm expecting this to drop, right? And it coincides with what we are looking at on the hour chart. The only thing that will give me pause is my MACD. And the reason being is because my MACD has crossed above my center. My MACD is in buyer's territory right now. Right? So, because it's in consolidation and we're waiting for a breakout anyway, it really doesn't matter so much with the MACD because we're not going to make a move, but it's an observation, right? Now, the other thing is just economics 101 is that we sell from the high and we buy from the low. So we sell when prices are low. In a minute. High. Yeah, because it didn't even sound right in my head. I'm like, that don't sound right. Right. So it all of the confirmations, support a move down to the downside. Now, as far as, so we just analyzed the 4 hour. Now remember, this candle here is 4 hours from opening to close, right? So whatever happens on the higher time frame has already taken place on the lower time frame.
That's why mathematically the pips are lower. Got it.
Mm-hmm. Okay,
that's why the pips are
lower. Okay, so you said that's why the pips are lower.
Yeah.
Explain
on the lower
that to
time frames. You said that the pips are higher on the higher time frames.
No. No, the pips are what you determine. Price moves in pips. That's how we measure price movement. Okay. We measure it in pips, right? So you determine the amount of pips that you want to, accumulate, and based on that number is basically times whatever you leveraging. So if you leverage $10 on 10 pips, just made 100.
Okay.
Right? So the pips are not lower per se. The pips move with price. And we measure that movement. So if we say, okay, from this point here, I'm projecting price to go down to this next key level. When I measure the close of this candle to the previous key level, that's 48 pips. So what I'm saying essentially is that I expect the price to move down 48 pips. And if I leverage, say, $1 per pip, then I just would have made 48 bucks. So pips is measured, is a unit of measurement, and it measures the movement of price. And we're going to go back to the hour. Yeah, everything to me, what I'm seeing supports the this move. Okay, so I put my vertical line here at this 4 hour candle, the last candle on the 4 hour chart. And remember, everything that happens on the higher time frame has already happened on the lower time frame. So we see this little candle here. So now we're going to drop down to the lower time frame, which would be the hour. Now, you see this vertical line here. That's that 4 hour candle. Everything at the right of that vertical line is what actually is taking place inside of that 1 4-hour candle.
Right.
Okay. So we see from the hour that price is pushing down because the 4-hour confirmed that.
The 4-hour.
Yep.
Right.
The 4-hour confirmed that.
We're zooming in.
It's coming together.
Yeah. Mm-hmm. Just. Yeah.
and you know, of course, you know, when you do this a couple of times, you're gonna get it. It's price movement. When we understand how price move, yeah, we can break this thing down, any chart, any time frame. And again, I know the big arrow is significant, but what's more significant is what is price doing now, though. You know, because when the big arrow, when the triples came in on the 4-hour, that was back in, the triples came in on the 1st of May. Right? Okay, well, look, that was the 1st of May.
Right.
I need to know what's going on now. Right? So that's why we want to always go to that most current candle and what is it doing, and ask ourselves those 3 questions. And that's going to always lead us in the right direction when we you know, ask those questions. So so that's just kind of analyzing. Now, as far as the trading plan and how we determine to get in the position, we're going to wait until price crosses the 50 and close. Below for a sell, above for a buy.
Let me write that down real quick. We're going to say, in order to get in, we wait until candle.
Bearish candle.
Until bearish candle
closes below the 50 moving average. And of course, if it was bullish, it would need to close above it.
Alright, so I'm gonna have to get that on there. I've got the whole one because I like how it turns colors.
But
the whole moving average 40, but I need this one here, this 50.
Yeah.
Average.
Which one do you have? Excuse me.
I have the whole. It's called the whole moving average 40.
I never heard of the whole moving average.
Yeah, I got that from Patrick, and
the whole.
HULL. I got it from Money Tree String.
Okay, it's the Money Tree. Yeah, I don't use the Money Tree.
Money Tree String.
Yeah, I recommend for the Trading Made Easy trading plan, we don't use that.
Okay. Right.
We don't use that.
Okay.
The 50 moving average, the reason the 50 moving average is significant is because you have the 50 moving average, the 100, and the 200. Okay, so
how do I get the 50 moving average? I'm sorry.
Yeah,
I don't see it here. Let me help me.
Yeah. So what we got? Oh, you still got the Money Tree on there?
Yeah, I took it off. I took that off. I know how to take it off, but I don't know where the 50 moving average is.
So what you want to do is go up to Insert, and then you want to go to Indicators, and then you want to go to Trend, and then Moving Average.
Okay.
Click on that, and then just put for parameters. Make sure you parameters. Put your 50 in there, and everything else should be defaulted.
Does 50 go? Where does 50 go?
Where does it say period?
Got it. 50. And you were saying there's 100 and 200.
Right, and you can color code your 50 whatever you want. And of course, the second little area here is you can control the thickness of it, however you want that. Then you hit OK. Now, so the reason that the 50 is significant because you have the 50, the 100, and the 200. Of course, the 200 is a hard period. It's a hard area where price is completely stable in that area. So, but it's in levels. The 50 is the beginning of that position. So in other words, when I talk about territories, right? So when you're in the 200, if price is above the 200 moving average, like that joker is going to buy for a long time. You see what I mean? Because that's a solid area of solid bullish area if price is above it. And just the same, if price was below it, it's a solid bearish area. So, but before you get to the 200, the beginning of that area starts with the 50. So when you get to the 50 and price go above and close or go below and close, we are in a solid bullish or bearish territory.
It's a forward indicator. Forward.
Yeah. So that's why the 50 is so significant. Another reason the 50 is so significant is because it is in alignment with the MACD. The MACD, when the MACD crosses above that center line or below that center line, that signifies the beginning of a new trend. So it's in alignment. If price is below the 50 moving average, and then when price crosses below the center on the MACD, you in a hard sell territory. Like, don't mess around in there, call yourself buying, because you're going to get ate up. And the same applies for the bullish market. Same applies. So that's what I was talking about when we talk about quality. We want to be in quality. Now, here's the other thing too. You can still and you will still have selling pressure in buyer's territory, and you're also going to have buyer's pressure in selling territory. But we're looking at who's overall in charge. Like, I'll let you get ahead a little bit, right? But when I rear up my head, because you're in my town, I'm going to take charge. And so we're going to still have that, but just know who's ultimately in charge.
That's momentum.
That's momentum.
Right? Momentum.
Yes. So so that's why we have that. Now, so here's the criteria, which is our trading plan. You know, our trading plan starts with the alerts. We spoke about the alerts, right? So we're going to put in an alert on the center line for the MACD. On the center line, if we're buying, right? So we would be over here. If we're buying over here, then what we would do when we see this big arrow, we're going to go ahead and just put the alert in. And we're going to put our alert slightly above the center line. Slightly above.
Okay, where'd you grab that from?
The crosshair.
Got it.
Yep.
Grab the crosshair.
Yep, grab the crosshair. Put it slightly above, because we want the MACD to not only touch the center, but we want it to begin its descent or ascent above that center, right? So just a little bit above. And then you look to the right for the price that coincides with that level. That price becomes the price you're going to put in for your alert. Okay? We do the same thing for a sale. Slightly below the center, because we want it to start penetrating, right? And make sure that it's a negative number, which it is. And that becomes the price that you put in your alert. So now we set our alert. We're done until we get the alert, right? We're done. Live life, do what you do.
Right.
We're done. Once we get that alert, now you will be alerted. If you're using TradingView's alert system, that is an upgrade from the free account, and they have a $15 a month plan that gives you 10 alerts, which is more than enough because your alerts are constantly rotating, right? Constantly rotating. And that's $15. And then the one that's unlimited is $30. Of course, you get more options other than the alerts, but as far as the alert, those are the two options. Now, there's an app that you can download on your phone. It's called the Easy Indicator Dashboard. And that allows you to put in an alert on a indicator. However, I prefer the Trading View because the price action is close to the price action on your MT4. Whereas the app, there's a lag. So it's possible that you can, get to the party late. It's possible. Not extremely late, but just late.
Late to the party.
Yeah, we don't want to be late to the party. So
slightly above the center, that becomes the price that you set your alert. Slightly above.
Absolutely.
That is for buying.
Yes.
Slightly below, that is for selling.
Yes. You're gonna be a beast. I'm excited though. Wow. I am. I'm so excited because I'm trying to hold because I'll talk to you about it as I just want you to keep going, get your bearings, get your understanding, and then we got some explosive things that we're gonna be doing. I'll just leave it at that. Now we have the upgrade of the system that's coming out toward the end of this month. It's gonna be phenomenal. First of all of those that already have the system, you're gonna be able to keep this system. And you'll also have the upgraded system at no additional cost. So you can put this on, 2 computers in your house. And then when you get the other system, you can put that on 2 computers in your house. So you got to have the best of, it's going to be really good. You're going to have the alert with the upgraded system. Woo, you could be anywhere. And that alert comes in and it's going to position you. But we're going to look at it and we're going to make sure that our trading plan still fits the model, right? Which I'm more than positive it will. But nevertheless, once you put the alert in, we wait. Now the alert comes. So the alert would have come somewhere, let's see, around in here, right? So we come to the market somewhere around in here. It looks like it kind of went through on this between these 2 indicating volume indicators. So what we do is once we get the alert, we come back to the market. First thing we're going to do is look left to verify that we have our triple arrows.
Okay.
We must have that. If we don't have it, we don't take the trade. We wait.
Okay. To verify you have the signals, indicators.
Yep, the triple arrow. Right. Okay. Then what we're going to do, because when we come to the market, there will be an active candle that's going, right? So we wait for the candle to close or wait for the active candle to close to determine if it closed above the 50 moving average for a buy. Okay. Now, once we made that determination, let's say, okay, basically this is the candle that would have been going on, right? So we know we're not doing anything because the candle is below the 50, right? And another thing, also I want to point out that we want the candle that closed above the 50 to be a bullish candle because we're buying, bearish because we're selling. It needs to be a bullish candle because you can have a bearish candle that closes above the 50, but we won't move on that one. We're going to move on the bullish. Okay. So now this would be the candle that closed above. Now, when the candle closes above the 50, the first thing we're going to do is look left for the previous support dots, immediate left, right? We want to determine if the candle closed on a support or resistance dot, as well as the trend line.
Closing above.
So it closed above the 50. And when we look left, we don't see any nearby support resistance. So we're good. And anytime you have space like this between your moving average and your price, that is a indication of a strong momentous move or a strong impulse. Basically, it went straight down, right? So based on this candle, we don't have any support resistance in the neighborhood. So you would have been okay, but you're not okay because look at where it closed. It closed very close to our trend line. So what we do is we measure the close of the candle to the trend line, right? We measure that. And we're looking at about 12 pips. Now, 12 or more pips is good. But if my candle, you still got to make a judgment call. If my candle is this close to my trend line, I would do one or two things. I would drop 2 positions at 10 pips each so that you cut your risk in half. That's the first thing. The second option is I would wait and I would wait if it was me looking at this because it's just too close to my trend line for me. But you still would have got your pips though. Because look, from the close of the candle to the top of this wick, well, no, where did price go? Right here. Price went right here. Price went from this candle here to this candle here was 13 pips. You see that? And it actually went a little higher with the next candle, that wick. So between 13 and 15 pips, this did go up. And you're good because, why? You put in 2 positions at 10 pips. See, if you would have put in 1 position at 20 pips, you would have had to deal with this drawdown before it went back up. And let's see if you would have made it even at that point. Yeah, you would have made it. But you would have went through this drawdown first. Our goal is to minimize drawdown. So by splitting the pips in half and doubling your position, you just you cut your risk in half. And you in and out of the market in market time. So as far as length of time, you would have gotten in on this candle 1, 2, 3, 4, 5 hours. You would have made your money, right? With very, very little drawdown. So let's measure the drawdown that you saved yourself. Okay, you would have had a potential drawdown of 25 pips if you would have put in 1 position at 20. Instead, because you did 10 pips with 2 positions, you only had 8 pips drawdown. See the difference? Mm-hmm. So that's nothing. And then you went right into profit. You went right into profit. So that's why it's important to measure in pips the distance between the close of the candle and the previous support or resistance dots, as well as the trend line. Now, obviously, if you have 20 plus pip clearance, you good. Put your position in. Always looking left for your guidance, right? Because that tells you, these support and resistance dots tell you where your potential profit is. The support and resistance dots tell you where your potential profit levels are. Okay.
Yeah.
So that's it. That's what we do. So let me just run through it again. Very simple. It's one with some data.
Look at it. I'm just gonna listen and look.
Okay. So what we do is we go through our symbol changer and we identify the pairs where the triple arrow has not populated yet. Whether that's a big arrow only or a big arrow and one little arrow. It hasn't populated yet. We put in our alert. Put our alert in for the buy or the sell, whatever you're doing. Then we wait. When the alert comes in, which would have been like right in here, so that coincides with this candle right here. When the alert comes in, the first thing we're going to do is look left to verify if we have our triple arrows. We have our triple arrows, good. If we don't, we wait. We just wait until we get it, right? And then what we're going to do is we're going to wait for that active candle to close so that we can determine if it closed above our 50. And it did. After it has done that, what we want to do is look left. And we want to see if price closed on a resistance dot, right? So when I look at this candle right here, we cleared these dots because the close of this candle is above it. So we're good there. But we have these dots. Now, we would not have seen the majority of the dots moving to the right, but we definitely would have seen the first 2 or 3 dots. That's all we need to see to know that price is approaching a resistance. So what we want to do is measure the close of that candle to those dots. And in this case, we'll take it from here to these dots right here. That is what? About 15, 16 pips, right? 15, 16 pips. And then we make our determination. Now, my rule of thumb is 12 or more. If I have less than 20 pips, I'm going to drop 2 positions at 10. We need to cut that risk in half. So, had we done that, also you want to look at your MACD. Well, your MACD was your first indication that price was meeting your criteria. So we take our measure, and right up at this wick right here would have got you in profit. This wick right here at 16, close to 17 pips. So you made your 20 pips by dropping 2 positions at 10. You're out of there. You're done. And you did it before what? Before it pulled back. Took you in the negative. So
you use those resistance lines as your profit, take profits. That's what you said, right?
Yeah.
Take profits.
Yeah.
Now, and selling.
Was both selling and buying.
Okay.
Yep. We used the previous, but because in this case, because this candle, you would have been able to see at least the first 2 dots forming at this point. That's all you need to know that you're at a key area. So I would measure from the close to the top or the bottom of those dots. The bottom, because remember, price is moving up, so we want to penetrate, right? But if we're at a key area, I'm not going to put my take profit above it. Is that me?
I think so.
Yeah, this thing just be doing some wacky stuff. The market is closed too. Why is it moving? Why am I getting alerts? The market is closed. It's crazy. But okay. So yeah. Now I gotta find my place. Where was I? Right here. Yeah, right here. I don't think that's where I was.
That's not where we were.
Yeah. No, because remember we would have saved ourselves from this drawdown. So it was this candle. Well, no, that was the trend line. That was
to the left.
Yep.
And to the left.
It was here. Yep, it was here.
Yeah. Okay.
Yep.
Yeah.
So we have from the close to the bottom is about 16 pips. Because it didn't clear 20, I'm doing 2 positions at 10. And you can do that as a safety measure anyway, no matter what. But the key is you're going to be accumulating more than 20 pips, but the key is to be able to to get 20 pips every single time you enter the market. We have to be good at one thing first. Once we master that one thing, then we can, expand beyond that, right? So now what happens the next day? How do we get in the next day? We made our money this day. We're only looking for buys. How do we get in the next day? Same rule apply. We're looking for a bullish candle to close above the 50. When we get a bullish candle to close above the 50, we do the same thing. Okay, now, close of that candle, look left. Where are the dots in relation to the close of that candle? Right here. 12 pips, right? 12 pips on this level. Once it breaks this level, the next level is here, 36 pips, right? I typically go 2 levels out, right? So because the first level is 12 pips, I'm dropping 2 positions at 10 pips each. And then my second position, or in that case, it would be the third position, you can take it to the next level if you wanted to do that. But my focus is that we get good at the 20. Don't worry about all this. We're going to have an opportunity to do all of that. Get good at the 20, right? And obviously you would have made your money there. So now you made your money that day. Second day, we're doing the same thing. We're looking for bullish candles above the 50. That's all we're doing at that point. And we measure the close of that candle to the previous resistance. Well, we will be able to see these dots right here. And that's like 13, because I don't go right up on them. So about 13, 14 pips. Do the same thing. It's the same thing. Now we want to also incorporate, consider our small arrows too. We want to do that as well. And the small arrow, if you have your bullish candle, because you're looking for a buy, and the previous small arrow is a bearish arrow, then I would wait. Okay, if it's bullish, then great, it's in alignment with where we're going, because the bearish arrows tell you that there's more selling pressure at the time, even though you're in bullish territory. So you want to wait until it pulls back. Now pullbacks are great because it gives us an opportunity to get back in the market at a lower price, right? So pullbacks are fine. We just wait that out. When it finished pulling back, when we get the first bullish arrow candle that closes above the 50, we start that process all over again. So now let me give you an illustration. If we would have taken it here, right, at this bullish candle, look left, we got a bearish small arrow here. What does that tell us? There's selling pressure. There's more selling pressure right now. But if I would have taken this trade, okay, for my 10 pips, I would have gone into drawdown first. 21 pips in drawdown before I would have got back to my pips and made profit. Whereas if we would have waited for the pullback to finish, right, and we get our big arrow, our candle close, and then we go through the same process. So see right here, we only cleared 13 pips, but from here we would have cleared 26 pips. You see what I mean? And we could have went it, and took it up, but we were looking at this direction because we don't see that yet. So we would have been able to take it to this key level right here, which is 50 pips. So we can use, now the arrows, the small arrows is part of my advanced training, and we can certainly do that, because training is gonna be all the time, and we can start fleshing that out. But with what you have now, the basic operation of our trading plan is very effective, and it's not going to prevent us from drawdown ever. We're going to, even with the plan working out, we can expect drawdown because that's just how price move, but we want minimum drawdown. That's the goal. We want minimum drawdown.
Do you operate on the 15-minute, 5-minute, 30-minute at all?
No, I ain't gonna say at all. I ain't gonna say at all, but my primary chart is the hour. Yeah, my primary chart is the hour. But you can certainly do that. I would recommend that you analyze, you base your execution of your trade on what's happening on the hour, and then you can drop down to a lower time frame for entry. Yeah, and when you do that, the criteria needs to still be the same. Okay, so you would have made your money here. You just would have suffered a little drawdown if you would have got in here, but you would have still made your money this day. Because remember, every day I want to see some profits, right? So now this day, hey, we in momentum now. So we wait. Now we don't trade when session opens. We wait because the spreads are high. And so we wait. And usually around 8 o'clock, you can start looking if that time is conducive. You see a bullish candle closed above the 50, right? We want to look left. Did it close on a support or resistance dot? And we should be able to clear. Now this is only 7 pips, right? So hold on, where is that candle? Was it this one? Yep, it was this one right here. 7 pips. Okay, and keep in mind your MACD is still your guide. The MACD is above in buyer's territory. The blue line, which represents buyers, is above the red line that represents sellers. So the buying pressure is strong. The buying pressure is strong. And so you can certainly take this position because you have more evidence, if you will, because we are like detectives, to support a bullish momentum. Okay.
Yeah, so we lost one of the indicators, but we have 2 stronger indicators.
Right. So this key level right here is the only questionable, but when you understand levels though, see, I would have taken this trade, right? Because when I look at the level that price from the beginning, price impulses, corrects, right? And then it continues. This is level 2. The first impulse is level 1. Then it pulls back. Then when it goes back in a continuation and it breaks the previous high, which is here, it broke it, right? That's level 2. When you get to level 2, you're in full momentum. So level 2, we pulled back, and then we continue. But see this continuation? It didn't break this previous high. So we're still in level 2 because it didn't break. When it breaks the previous high, that's another level, basically. So here, I already know, okay, yeah, this candle here is right below that resistance. I get it. But we're in level 3 though. So what you can do is you can wait for the next candle to close above it. The minute the next candle close above this area, you're in level 3. And now you're taking off. Right? And it will continue, it will impulse, and then it's going to correct. And remember, we talked about consolidation is the beginning of a flag, right? It's the beginning of a flag. And so that's what's happening here. And then we correct it. We had the flag and we correct it. And then it just continues up. So at this point, like if you rolled this trade, you'd be in a risk-free trade you would have been in a risk-free trade from this point, really. Yeah, if you would have got in here, you would have been really in here. You would have been risk-free at this point. Okay.
So understanding that, how do we get here from the beginning of that impulse is the key here.
Absolutely. Anytime that you analyze in the market, You want to know, how did we get to where we are? Because that's going to determine, that's going to let you know where you're going and how you can get in the trade. Because we only trade with the trend. So if it's in a correction, you know we have to wait for that correction to be over and for it to make its move up to the upside. When we do some more advanced training, we'll start talking about engulfing candles to look for that, because those are strong indications of reversals. And they're everywhere all the time. Okay? So we got to get good at this first, and then we'll start adding another element.
Fine by me. My question is, I know this is a live account, so how do you actually get into the trade?
What you mean?
How do you start it and then put the stop on it?
Like how to actually execute the trade?
Yes.
Okay.
Yes.
So on your MetaTrader 4, you want to go up to New Order, right? And your order form will populate. This is how you execute. So of course, whatever pair chart you on, that's what you're going to see here. Okay. And the volume is your lot size. Now,
lot size, what does that mean? Lot
that's
size.
the leverage. That's the money that you're going to leverage on that account, on that trade. So whether that's 10 cent, I always recommend 10 cent. Let's start at the very low amount, right? Until you get the hang of it and you can start scaling up.
0.01 is 10 cent, or is that 1 cent?
Well, it's 10 cent though, but it's a micro. And the way price looks to us is different in the currency market. So what looks like a penny is 10 cents. Okay. What looks like a dollar is $10.
Okay.
Right? Now with this order form on the computer, it goes from 10 cent to 50 cent. Then from 50 cent, it jumps to $10, $20, $30, $40. But there's a lot of money in between that. 90 cents, $1, $2, $3. So what the best thing to do is to manually put your leverage, your lot size in here. Okay. So that's that. And then, excuse me. And then your stop loss and your take profit will go here. Right.
Okay. And we base that on the resistance, right?
Absolutely.
And support and resistance.
For your take profit. And the stop loss, you can put your stop loss above above your arrow. So your initial stop loss will be below the big arrow. So what you would do is put it below, and the price that coincides with that becomes your stop loss price.
59439.
Yes. Now you're in the trade, you're moving, you're making the money, you're going up, right? So now let's say that we're on this day here. We're in this day here. We're up here now, right? Your stop loss is down here. The further you go up, the higher your risk is, because your stop loss is down here. But the thing is, the probability of your profit is much higher than the probability of it hitting your stop loss. But as a rule of thumb, you want to move your stop loss as you travel up. You want to move your stop loss as you travel up. So when you up in this area here, when you make profit here, then what you want to do is move your stop loss to, say, this arrow. Right? Use your arrows as your guide. And then, so that becomes your stop loss. The previous support or resistance area becomes your take profit. Or if you're doing the 20 pips, you can take your crosshair, right? And let's say right here we get in. Take your crosshair, put it at the close of the candle, click and hold, and just drag it up to the 20. So you see 22 or 23. Because you want to cover the spread. Right? And the third set of numbers becomes your TP price. That's your take profit price.
Nice.
Yep. So you will put that number inside your order form. You'll take profit area. And then the type is market execution. Market execution means you're getting in the market as is. What it's doing right now, put me in right now. We're going to go over pending orders on another training. And then you want to hit buy or sell. If you buy in, boom, and that's going to put you in the trade. You're in there at that point.